So what I'm not understanding is how it's possible for them to pump in. China's pumping in trillions of dollars into the market, or trillions of renminbi into the market. The Fed is cutting interest rates, and quantitative easing, or at least stealth quantitative easing, has developed. We're seeing we saw stocks at all-time highs. We saw Bitcoin at all-time highs. So once this leaks through into the the full effects of it leaks into the market, we we should see a bout of inflation. Like, we should see that resurface a bit. And if that's coming on, and we haven't gone back down to 2%, I just find it hard to believe that we're not going to see at least a return to 7%, 8% inflation. And if we take a look here just quickly at the bond market, so after the Fed speak, I also look at the bond market, right? The bond
Mhm.
market is the source of truth. And the bond market has shown here that we've had, let me make this a little bit bigger. These yields, these are all the tenors. So from 3 month all the way up to 30 years.
Mhm.
We're moving up on the long term yields are moving up, and the short term yields are coming down.
Still coming down. Yep, that's correct.
To me, the trade is short TLT, long SHY. So long short dated bonds. If you're going to be in the bond market at all,
Mhm.
you want to be long the short dated bonds, because that's what the Fed is actually controlling with their interest rates. As they're cutting down, those bonds are becoming more valuable. And then the long term bonds are, as the yields go up, will become less valuable. So you can make money on that trade, on that spread. But this is telling me that I think the what is it, the 10 year over here, the 5 year is now above. It's like a higher high, and so this low here, which we were talking about a couple of weeks ago,
Mhm.
I think that's in. I think this is the support for yields for now, and we're going to make a new higher high. And if that happens, eek, it's going to be painful. That's, what is it, 11, 12% inflation. If this breaks out, I'm not sure what to make of this. I'm super super nervous, but I just wanted to say something against my point of view, because I am full on the point of view that that inflation is going to come roaring back. And I live in Canada, so I don't know if you see the headlines in Canada. Like, it's just a crapshoot up here.
Mhm.
We don't even know if we're going to have a new prime minister soon, which is almost as good as a president, in case people don't know that. Um, and I mean, we're talking about some of our provinces are talking about becoming the 51st state. Like, full on, people are like, "Hey, maybe that might not be a bad
let's
idea." Like, up
let's
here, we're
break away
thinking
from
about it.
Canada, huh?
Yeah, absolutely.
Okay.
And then specifically, people were saying, but not Montreal and Toronto, which is where I live. I was like, "Oh my god, I don't want to hear that." But the just to say the opposite point, I do think inflation is going to run up. The dollar, even though I've been calling for the dollar to go, let's say, to 120,
Mhm.
there might be a case to make that the dollar actually has topped. I
At
don't believe
that at that
here.
peak of 108 or 108.50, right?
Yeah, exactly. And I just wanted to show a couple of points for that, because I thought it was interesting. First of all, if actually we go back to the charts, we'll see here that the dollar, when Trump became president in 2016, we had the dollar basically happened over here, and then it rolled over. The dollar rolled over down here. Let me just make that clear. So this happened after the Trump presidency. And so some people are making the claim that that's what we had here, that this run up was into the election, and then a little bit past it, and then after inauguration, that we're going to see the dollar come down this way. And one of the things people are saying, that the dollar is moving. You know how people do the chart crimes; they just match charts together, fine. But I wanted to bring this up, that
Spurious correlations.
exactly right. So, but I just wanted to bring this up because some people are talking about it, that we're going to end up with the dollar coming down because of it, which would be great, and would sort of coincide with the idea that that Bitcoin now at its if this is a low for Bitcoin, a falling dollar would lead to a rise in Bitcoin. So maybe that's the case,
Hmm.
but I don't know. How do you feel about where the dollar is at the moment?
I think, the dollar has been an interesting leading signal for the crypto market, of course. I think that this particular sell-off I guess the way I would have to measure it is against this correlation that crypto is experiencing to the rest of the equities market, and whether or not we see a divergence in that correlation for some extended period of time. If there is a deeper pullback inbound for equities, I currently expect that crypto would follow suit. So I would be wanting to keep a really close eye on where we might break in the total crypto market over the weekend here before the markets open back up next week, because there's always an interesting trend when it comes to crypto over the weekend. You get a little bit of a sense of how traders feel about the upcoming week while the rest of the market is closed, and crypto has this opportunity to trade all day Saturday and all day Sunday.
Right.
So the one level I would be worried about on the total market, if I can just share my screen here. So this is the total crypto market. If you're not familiar with this symbol on TradingView, it's just type in total and it'll give you the total market cap of the whole crypto market. And this, is largely in line with the price action that you see on Bitcoin, but it's a really good way to kind of get a sense of all the cryptos together. And what we did is we touched this recent low here, which has me, a little bit concerned that if we break that level, we could see a continuation from here, and that crypto could be the leading indicator of how the markets might respond next week. But given that the markets, sort of the equity markets came back so strongly today, this could have been just a healthy correction, and we might see a continuation to the upside from here. As always, I'm always looking at, whether or not we're breaking recent lows. We're looking for support and resistance breaks. We're looking for prints of higher lows over the long run. And so far, the trend continues. But I would be interested to see if crypto sells off, if equities, stay in line and the two move down together. That would sort of fall in line with the correlation between the two markets.
So if that's the case, are you expecting? I'm wondering if you've seen a lot more downside for Bitcoin and Nasdaq. Actually, before you answer that question, because I do want to lead into that segment for stocks and Bitcoin, I want to play this clip from Kim Carson. I love my Carson corner, where he was talking about the sell-off. Just a preamble over here. We have been talking about. Kim Carson talked about the run up to Santa Claus rally for stocks, but that we are headed into December option expiration, which is a period of weakness, and that he did say that window is smaller in December, but that it's possible for something to happen in order to get the catalyst to the downside. So I just wanted to play something from him, a quick clip from him talking about it, which I thought was particularly interesting.
Which means we've had 9 consecutive sessions in a row on the 10-year where the yields on any given day are higher than the previous day. That is building momentum. We've talked about it, and it's been a great technical indicator. 2's10 spread, the steepest, the widest, going all the way back to mid-22. That speaks volumes about the market's anxiety on inflation. And finally, the dollar index on pace for another record close going back to the end of 2022. But maybe the most interesting story is all that volatility in equities and what it may mean. And for that, we're going to go talk to Cham. Hi, Cham.
How you doing, Rick?
All right. Yesterday was one of those days where the equity markets
Cham,
went
I haven't
wild.
heard that one
now,
before.
so did interest rates. But when we spoke, you had a good explanation that I think viewers would be quite interested in.
It's a perfect storm. Not only are you getting the inflation and the catalyst, but it's important that it's DES OPEX. It's the biggest options expiration.
Option expiration. And we have a Greek tragedy here. Beta, theta.
A Greek tragedy.
Go on.
Options expiration is the biggest one. These leaps have been on the board for years. Ton of open interest on the put side. So what happens when all of a sudden you get a big catalyst, you start moving, all of a sudden people need to cover risk. And that was a lot faster than people expected. A lot of short covering, on these options.
So they were basically selling futures to neutralize some of the exposure they had on the option side.
There was a lot of put selling dimes, 20s that went up to $5 on that move. When that happens, that creates a margin call issue. So people have to cover that risk. That expires tomorrow morning. So a lot of that relief is what you're seeing here in terms of the push up as those things are coming down. But until that comes off the board, you have this volatility pressure.
So they see that opening price and then we're pretty much done tomorrow.
That's right. But the big catalyst is still there. So don't think this is necessarily over. The structured flows that we've been seeing that have been supportive are fading. They're going away. And as that starts to fade, you're likely to get more and more selling here into the next
I used to love expiration days. There's a whole nother game. So even though that opening price kind of is the end of the game, you have till when to decide if you actually want a position in those options, take delivery, so you can play the game, seeing where the futures market, the cash is, then decide, okay, I want that position, or let them expire worthless, correct?
That's exactly right. And the AM print is critical tomorrow. If we're stable through it, which it looks like we will be, you'll get a little bit more support. But then Friday, Monday, after that initial support, now there's a whole new ball game. So a lot of those hedges come off as well.
Right. Okay, now, how should we look at the rest of the year with respect to beyond the big expiration? Is there any dynamics going into the end of the year under the Santa Claus and the turn that we should be aware of?
There's a re-leveraging effect into the end of the year that should still provide some support, but this interest rate inflation story is the story. As we go into the election, there's going to be a lot of risk off. People don't want to wait and stick around for what might happen to accelerate some of those forces. So I think that stagflationary forces, which you and I have talked about for some time, are going to be at the heart of all the conversations.
Excellent, Cham. Always fun to talk.
All right, so a lot to unpack there. I just want to summarize it quickly for some people who don't know necessarily all the different jargon. The base case over here is that there are market participants, and some market participants are forced buyers and forced sellers. There are circumstances under which they have to buy stock or have to sell stock. And that's not only market participants, but those are dealers as well. People who are participating in the markets who have no interest in making money on the direction of the stock or of the markets. They're making money off of the spread or the fees, and so they have to keep their accounts balanced. So what he's saying over here is that in this window of weakness, there are these puts, these leaps, these options that were there, these insurance policies for stocks that have been there for years. Some of these leaps are 5 years ahead of time, and they coalesced around this period of time. And when there was a little bit of a shock that happened because of the inflation story, that it looks like we might be headed into a stagflationary period, that there was a sell-off, and that sell-off then gets exacerbated because we're in this window of weakness. And as those options become monetized, as they become more and more and more valuable, like you can sell them for more and more, the dealers have to sell futures in order to keep their books balanced, right? Because someone has to pay out those options to those options holders. And he goes, and he's saying that what we had over the last day and a half was a bounce in the markets, because as those get monetized, those hedges get paid back. The supported flows at the end of the year anyway, forced buyers that come in anyway in December, that gives us a little bit of a bounce. But if that bounce doesn't go far enough, and we end up in a situation where all those hedges come off, the options and hedges come off, and those supportive floors are gone, he says it's a whole new ball game. We don't know what happens after that. If there's then some reason for a bigger catalyst that hits, then we could slam right through lower, and people will scramble in order to get their hedges put back on, which means they're paying more of a premium, and we get this exacerbation to the downside. And the more it goes to the downside, the more they have to hedge, and then the more the dealers have to short, and it's this whole thing where you can end up with a craziness exactly on the downside. And so he says, hey, watch out, we don't know what's going to happen.
That's right. And as expected, I was thinking too that the second day after our first pullback here on December 18th, on Wednesday, that pullback, of course, was a strong early signal that this type of activity would begin. Right? This was I felt like this was stop hunting. This was hedging, hedges being put on. This was the options market and the dealers, the whole combination of it all. The next day, the expectation was that this could be a continuation, but today's buying activity, that to me is a bit of a fake out. And even just from a technical perspective, let me just share my screen here, as I kind of look at this retrace, this looks like an actual pullback from here. Right. So although it looks like, okay, cool, this looks really strong, we're still below this new trend that we've begun. We've crossed below this moving average that I have on my screen, and we're likely to see a rejection of this if we don't cross back above it. And if it does reject off of this, it could be definitely a lot more room to the downside as we go through a full correction cycle. It's possible that we revisit on the Qs, roughly an 11% pullback overall, and revisit the 484 level. which of course is going to get expressed in the futures market as well. But I would expect a very high correlation on the S&P 500.
That's so funny. I just messaged someone today where they're asking me how far I can go. I said 11%. I think for the that's so
yeah,
funny.
I would expect sort of the previous low here, or really just kind of an established support level.